Hey guys, welcome back. You're tuning in to howtoplaystock.com. Hope you guys are having a good morning. Today is February 1st. It's Thursday at 8:05 a.m. And today's video, I'm just shooting a video on what Alan Greenspan is saying right now about the stock market. There's a article here I found on CNN Money. I'll put the link in the description below for you, but he uh, he basically is sounding the alarm about the booming stock market, and he says there are two bubbles. We have a stock market bubble and we have a bond market bubble. The former Federal Reserve Chairman told Bloomberg TV on Wednesday the trouble in the bond market will eventually be the critical issue, Greenspan said, adding that for the short term, it's not too bad. Many Americans recall that Greenspan, known as the maestro when he led the Fed, described the dot-com mania of the 1990s as irrational exuberance. That memorable phrase from late 1996 ended up being right by several years earlier. The NASDAQ didn't peak until March 2000. Greenspan, who was appointed Fed chair by both Republican and Democrat presidents, raised doubt in the interview about President Trump's economic agenda. Uh, and the thing is, if you watched the State of the Union the other night, Trump was asking for $1.5 trillion to help fund infrastructure for the United States, with roads, buildings, bridges, all that stuff. That sounds really good, but one thing you have to keep in mind is that we live in a debt model system, so for every dollar that is created, there has to be probably $5 now of debt that has to be created along with that $1. So even though he's asking for $1.5 trillion dollars, it's still borrowed money, which means you might as well times that by 4 or 5, because that's the kind of debt you're looking at adding on to the national deficit. All right, and it's just pure math. That's all it is. And I think that's what he's referring to here is he's raising doubt in the interview about President Trump's economic agenda, because it is kind of concerning that it's adding more debt to the national deficit. And can we sustain that? The answer, I think we all know, is absolutely not. You can't sustain an economy where you have to borrow $4 or $5 for every dollar that's created. If we were living that way, say in our own personal homes, and borrowing that much money um, without making new money, or being able to create something of value besides the new money, the thing is, you don't have any assets there. There's no assets there to create money. They're just printing it through a print press. So that's kind of what I'm trying to get at here is, if we were living our own lives personally like that, and we didn't have any assets to create that money, and we were borrowing that much, we would be completely screwed. All right, it would be game over for us, and it's a serious problem for us as well, as a nation. Trump's tax overhaul is expected to add to the federal deficit, something Greenspan has previously called a mistake. Trump's plan to ramp up infrastructure spending could do the same. He's not detailed how he plans to pay for it, and that's what I'm referring to here, guys. Asked what happened to the frugally and prudence of the GOP, Greenspan replied, "Good question. If you find out, let me know." And then it goes on here. Greenspan is basically skeptic. The bond market. Last July, he said that bonds, but not stocks, were in a bubble, and now both are in a bubble. And if we go over here and we look at the Dow Jones real quick, look at this chart. I mean, I've showed you guys this in a couple other examples out of a book that I read, but this is the Dow Jones right now, and you can see it's just parabolic. It bounces off the weekly support here, back in September of 2017, and since then it's just shot to the moon. And we're getting a little bit of a pullback now, and you can see on the MACD here, that blue line, if it crosses under this orange or red line, you're looking at a downward trend. Obviously, we're still in overbought territory on the Dow Jones, as soon as we cross back under that 80-point mark, um, look out below. Now everybody's asking about how far down can this thing go? Well, just all you have to do is take this back to the beginning of this weekly support line, and on the weekly chart, anyways, this goes all the way back to November of 2016 when we were at 17,986. So that for sure, if we zoom out here, that for sure is your first level of support where it could fall. Now it could fall a lot lower than that too. If we go back to a monthly chart, it could definitely fall a lot lower than that. We could go all the way back here to 10,000, like 389 points, or even lower. Um, if we go all the way down here, where my cursor is, you're at 7,698 points. So that first level of support, though, is what I'm looking at, which would be back up here. And I'm on a monthly chart right now, so that first level of support would be 17,964. Anyways, like I said, I'll leave a link for the article so you can read it yourself in the description. If you like what you're hearing, go ahead and hit the like button. Share this with others. Get it out there, because guys, we all seem to be investors these days, whether we know it or not. And that's investing through your 401k, or on your own personally through a stock market, or an index. So you have to be very, very cautious of when you're getting into the markets, because ultimately it comes down to the price that you're paying when you get into these markets. And if you don't know anything about chart reading or where we are as far as the stock market being valued, if it's overvalued or undervalued, if you don't know any of that, you're going to get burnt. So that's the reason why I'm shooting this video today, because I thought it was interesting that Alan Greenspan decided to comment on the stock bubble as well. So with that said, you guys have a good day. Hit that like button, subscribe to the channel, and remember, guys, income is the outcome, okay? I'll talk to you later.